This is Golden Rule Radio, your weekly recap of the precious metals markets.
Breakout.
This is Golden Rule Radio. That sounds pretty cheesy.
Mine was better.
It is. This is your weekly recap of the precious metals markets. Miles, what's going on with gold?
Well, we finally had our breakout. $12.95 once, twice, three times the charm, and we, I think, pushed up to about $13.20, $13.25 thanks to Kim Jong-un and the North Korea rocket test this past week. So gold did top out in the 1320s. We're at about 1308 here, and we've got a whole bunch of potential directions we could go from here.
At least gold is telling the truth. If all you were to do was look at other markets, you would have no idea that North Korea was even doing what they're doing. Great
quote from Bill King this week on the King Report. Despite the most aggressive North Korean provocation since the Korean War, Old Testament-style destruction in Southeast Texas, dysfunctional political leaders, and the worst socio-political climate since the 60s, stocks rallied in the U.S. on Tuesday.
What is going on? At least we have the barometer of gold.
Correct. And the dollar.
Yeah, and we'll definitely get into the dollar here in a minute.
With gold, we're looking at the level of 1335, like we've mentioned in past shows. And that level is the intraday or overnight high in the price of gold on election night. If you look at the chart, it has just this little line right there in early November that goes up to about 1337. So we'll be watching that level closely, as well as the 1300 level, because we've been, for the last number of months, we've been stair-stepping higher, and finally we have this breakout into the 1300s, and it could easily pull back below 1300. But we're going to be off to the races pretty soon, it looks like, guys.
Yeah, strong support at 1295 still. Resistance becomes support like always. And then even if we break below there, you've got a 618 fib all the way down in the 1250s. But I do think we would see 1335 on the price before we would see any kind of pullback.
I don't know that we will. I'm not sure about that, because yesterday's action kind of alludes to hitting a line that was drawn back in the charts back in late 2016, and then the bottom right at 2017. It was a 1-3 line, and if you extend that line out, we kind of ran right into that yesterday. So it could have completed there, just a little shy, but I wouldn't be surprised to see what you're saying at 1335 before we see resistance back to 1300 or maybe a little bit below.
Well, and giving King a little bit of credit, we do have a lot of things building fundamentally, right, that's going to push on the metals prices. Last week we talked about briefly, look, sometimes you throw technicals and fundamentals aside and you just focus on what subjectively you're kind of feeling and sensing in the markets. And so we thought by the end of September we'd see 1300. We didn't think it'd be by the end of the next week. That being said, I'm kind of with Robert on this, in that I think we're seeing a new bullish trend, not only from a technical standpoint, but again, because of those fundamentals that are building in the markets.
Speaking of the fundamentals, the main theme that's been going on since Trump has been elected, with stocks going further into the stratosphere and the dollar going down. And I want to point out the theme that was going on before the election. Do you remember what this theme in the markets was? I mean, it was expected that stocks were going to fall, gold was going to rise. And so if you look at the night that Trump was being elected, that afternoon going into the evening, that theme was playing out in the markets. Gold was up 4 or 5%, stocks were down 4 or 5%, and then we had a complete reversal. And since then, gold has been trading under that level. We're now approaching that level again, which is why we're talking about this being so crucial.
Well, and I think that's a good point. You go back a year from today, and I don't think most people thought Donald Trump would be our next president. Most people at that point were certain Yellen was going to start raising interest rates. So we were expecting
Hillary Clinton was going to be president.
Hillary Clinton would be president. Interest rates are going to go up. The dollar's going to rally up. The stock market's going to be allowed to take a correction. Go back a year, like Robert was saying, and we had been building towards this completely different U.S. economically, and then everything changed in November. And so I think for the last 7-8 months, in complete agreement with Robert's point, is we've been sort of shaking that out, and we're going to have a resumption of that pattern coming soon.
And you did see the markets rally in hopes of this large spending package that he promised, the tax cuts that he promised, and he's had little to zero success in accomplishing any of that. So it shouldn't surprise us that all of that faltering and stalling has impacted the metals the way that we've seen it impact them.
One success is that he wanted a weaker dollar, and we sure have that, down 10%. Yesterday's action on the dollar, I think, is also crucial, just corresponding to the price of gold kind of spiking there yesterday. And if you look at the euro dollar currency pair, as well as the franc dollar currency pair and some other ones, it could be indicating that the dollar actually had a little reversal yesterday. We'll be watching that closely to see if that actually plays out. But big picture, Trump got what he wanted in December. He was stating he wanted a weaker dollar, and here we are down 10%. The dollar is going to go lower even if we have this interim rally that we've been talking about from here.
It's hard to tell if gold always just reacts to the dollar or if sometimes the dollar reacts to gold. Last week, Miles said, quote, everything is waiting on gold to decide. I don't know if you guys remember that, and he said he's calling that the Maginot Line last week. And so everything's kind of looking at each other saying, we'll go if you go, but you have to go first. I kind of get the sense that gold went first, whether it was a North Korean thing or whatever else. So that being said, could we impact the dollar negatively? Yes, but to Robert's point, a lot of that is purposeful. This week with the Federal Reserve, both Draghi and Yellen had a chance in Jackson Hole to say something significant for the dollar and the euro.
And said nothing?
And said nothing, right? I mean, there's no hinting, there's no allusion to any increased rate hikes coming certainly in the near future or in the future at all. They need to see things play out.
Miles mentioning Bill King's quote earlier in the show. Bill King will be on the McAlvany Weekly Commentary with David and Kevin coming up in a few weeks, and he always provides a great interview, lots of energy. In that quote that Miles provided, he mentions, despite every negative thing going on in the world, stocks continue to go up, which they did. But yesterday, it seemed like the Plunge protection team might have shown up, because you had these levels with the Dow Industrial at 21.7, and you had in the S&P about 24.25. Those levels were key levels that were absolutely defended. And King points out that despite what's been going on, there was no reason for such aggressive buying yesterday, only unless someone wanted to push stocks higher for some purpose. Who could that be?
So for you manipulation junkies out there, this is where we see it. Here's the interesting thing too, even though it was pretty clear yesterday morning how the S&P, how the NASDAQ, how the Dow all rallied, if you look at the longer term charts, they didn't actually get anywhere.
Right.
They didn't put in any new highs. They didn't accomplish anything.
So are you still calling for 18,000 then? Like you haven't
and
changed
today
your
they're
song?
languishing.
Yep.
They didn't follow up yesterday's manipulative move. Manipulations only work if the market follows you. You can pied your piper all day long, but if the mice aren't following, you're not going to get anywhere in the long run, and the mice aren't following today, and they're probably not going to tomorrow.
So before we leave the metals altogether, I mean, let's not forget, you can claim manipulation all you want. Ultimately, they win out. Gold's up over 13% this year. Silver's over 9%. And so is platinum. The white metals have been strong. Platinum 9.2%. Palladium is up over 36% on the year. So people can complain about the manipulations. The metals are still doing what they're supposed to be doing.
Well, and silver is the interesting one because gold has shown bullish behavior this year. Platinum has started to show bullish behavior. Palladium is in its own little universe.
But appears to be running out of steam.
Yeah, it does appear to be running out of steam. But silver's interesting because even though silver's up, 8-9% you said this year, we're actually still trending down in silver. We've still yet to put in any form of higher high in the last 2 years. So for those of you who are silver junkies, and I know a lot of people are, this may be one of those few ringing the bell moments you get in life where you actually get into a market at or near a bottom.
Stay patient too if you already own it. We've recommended it and advised adding to that position. So stay patient, bear with us, bear with the ratio.
So silver's coming up on posting its first higher high since about April. But prior to that, we've had pretty much nothing but down movement since about, June, July of 2016. So silver will have its turnaround since gold, platinum, palladium all already have, and I think that's going to be the bandwagon to jump on if you haven't already.
So let's wrap up here, guys. In terms of last week's recommendations, that went really well. Those items are no longer on the table, but we are focused still on platinum, silver, and US $20 gold pieces in an MS63 or higher category. And the reason being is they're premiums. And I will give you a personal testimony. In 2008, I acquired for my family trust MS63 $20 Liberties. Gold bullion, the spot price and the coins dropped 28%. Those 63 Liberties went up 42%. We turned around and flipped them then into bullion. We swapped and we picked up that 60% difference in ounces. We then rode the bullion price up from about $800 an ounce to over $1,900. So I picked up free ounces that way, and that's why we look at those premiums and allow your portfolio to benefit from the free ounce gain.
That's exactly why we talk about these partnerships that we have with our clients, because we're looking for opportunities. We're looking for these ratios, these premiums being low right now, and that is your opportunity. We offer a relationship that I don't think you can find anywhere else. So thanks for watching and listening this week.
And don't forget, as usual, if you like what we do, hit that subscribe button down at the bottom. Give us a little thumbs up. Definitely post in the comments your opinions on manipulation versus technicals. Head over to Twitter at ICA Gold if you have any comments. Or you can always call us at 1-800-525-9556.
See you next week.